Kevin Green going to look at some charts for us and a couple stocks too. KG, that economic bear case from Barry there is certainly not invigorating anyone to buy stocks who's listening, I don't think. If they think he's right on some of that stuff, especially the next jobs print being weak. Bonds really rallying this morning.
Yeah, and this is going to be a little bit of a difficult market here, Oliver, because obviously that PCE print came in a little bit hotter than expected, and he's right. I mean, we haven't had any March data yet, and once we start getting that data, how much is the street really going to weigh on that for now? But from a technical standpoint for the S&P 500, we are at the lows that we saw actually on Wednesday of actually yesterday, the open of yesterday here. So you want to see some buyers kind of stepping in. I have a very wide range, and unfortunately, this is just how the positioning is. This is not a guessing game here. So 5,700 to the upside here is going to be your first area of potential resistance. To the downside, Oliver, I have 5,600. You're talking about 100 points to the downside that's being kind of priced in or layered into today. To the upside, you're looking at 5,750 as your area of resistance. Once again, these are just based on the volume flows alone. Nothing of the technicals or guessing here. It's just a wide market. Wide market today probably signifies that we will have some volatility. A couple of questions that you have kind of going into this. How much do we trade the news flow? That's where we saw a little bit of a bump over the last 20 minutes or so, that Bloomberg report around the EU, potentially EU concessions around autos. We saw a little bit of a bump here, but that PCE number, once again, was a little bit bearish. So how does the market really try to navigate through some of these waters here? And if we do get some updates from the White House, maybe they're open to these EU concessions, maybe they're not. I think that's going to really drive price here. So expect a little bit more volatility today, both to the upside or downside. And be very tactical when it comes to the positioning today. I think it's going to be a pretty wild ride.
All right. Well, if bulls can push through this, then it would be very impressive because the cards are kind of stacked against us right now with also the bid into gold, the move down in BTC. I mean, look, we're 60 bips. So, for the NASDAQ, it's not like the move is big. There's still plenty of opportunity here for sure, but you really have to stick your neck out, basically. This is the part of the, it's not a rally. This is the part of the bounce that we've been in that's like brass tacks. If people don't show up today and we get below 5,700 meaningfully, it feels like then anything's possible, including the recent lows.
I would agree to that to a point. Once again, we're still actually kind of testing this gap that we made from last week to this week.
That's what I'm saying. If we get through there, then it feels like all our progress is kind of lost. I know there's still a couple hundred points below, but.
Yeah, I think if you actually get from a technical standpoint, if we kind of look at the daily chart, if you actually break through 5,600, that's when you would say all things are lost, because you could go back into that range that we saw last week, that compression. And if that's going to be the case, we battle it out there, we kind of move higher, then that also states that maybe we have some bulls that actually find value at that particular level, which I think is going to be key. A break below 5,600, I think that's where you get really concerned that we start to kind of move to the downside. That would also kind of break this bear flag pattern that we have on the S&P 500, basically a counter trend rally to the upside here. But the primary trend over the last 2 months, 2.5 months or so, has been to the downside. So I wouldn't say all is lost right now. There's still a lot to go when it comes to today's trading session, as well as for next week. But we're kind of in no man's land. I would say the bears kind of have the edge for now, basically defending a lot of these moving averages, trying to test that gap. But 5,600 is going to be that key. And I don't know, what will also be interesting. So did we see some new short sellers kind of getting into the market? That could be the case. Do they also want to carry over risk over the weekend? Is that going to be the case, right? Which could also then fuel like a short covering rally going into the close because you don't know what's going to happen? Or do you have bulls that say, hey, I don't want to hold long over the weekend? That's where we're going to kind of see what the deciding factor here is for now. But once again, I say that we have a pretty wide range here for today's trading session, and we'll see how everything kind of pans out.
Yeah. So, okay, we need to stay in the gap at least, and preferably push back out of it into Monday's levels. Dollar trying to find some support in the high 103s too. So that maybe helps. Bonds kind of cooled off a little bit there, but just a momentary breather very well could be. International markets are down 40 bips. EFA down 40. FXI is down 1.5%. Kind of interesting that the other stuff's not catching a bid. more technicals, or you want to talk some stocks, KG?
Well, let's do some technicals here real quick, and we could talk about the stocks. Let's bring up that 15-minute chart one more time. So once again, we saw some buyers kind of stepping in here. This 15-minute candle is going to be key. It's going to close off in about another 8 minutes or so. If you're watching this in real time, if we can have a hammer, a green hammer candle there at those lows that once again we're kind of defending from yesterday, that would be key. You probably will see some buyers kind of stepping in. So once again, a lot of volatility kind of taking place right now when it comes to the market. The other chart I wanted to kind of highlight here before we start talking about the stocks, 10-year minus 3-month treasury spread, something that probably we haven't talked about in a very long time. I know I haven't, but keep your eye out on that. Actually, it's a pretty decent indicator of what's happening right now. We did have this nice little move to the upside when it comes to that spread, but you're starting to see that spread kind of coming in. And last year, obviously, we had a negative spread there. But notice the technical trend that we're seeing there. Once again, moving to the downside, bear flag to the upside. What are you seeing for the S&P 500, which is in white? Same type of reaction. Sure. This is going to be the spread that we probably need to keep our eye out on a little bit more, and probably get even granular when it comes to even a daily, or when it comes to maybe a 15-minute chart or a 5-minute chart, to kind of give us a little bit of a direction as, hey, where does the market really want to go right now? Because it does not want to go back into this negative spread regime. Totally. We can kind of see that with the S&P 500.
Oh, I love that. I'm happy to look at yield spreads on an intraday. I just, anytime I do that, everybody tunes out. So I'm your audience, KG, audience of one right here. I love it. I mean, that's what I've argued, that you want yield curve widening, and it's perfect that it did that while stocks bounce. So I like that you're watching the crunch. The 10s and the 2s are also getting crunched a little bit today as well, which is what Barry Knapp was describing as that growth concern that's coming back into the long end. So point noted on the spreads. Let's talk some stocks. Tesla, down right now, did just get hit, but there's obviously a serious battle in Tesla happened at 270 based on what we saw yesterday.
Yeah, a lot of activity happening in Tesla. And actually, over the last couple of trading sessions, you are seeing options volume just spike to the upside, too. So I think that's also creating this catalyst for price advances, as well as that kind of intraday drop that we saw yesterday after crossing 290. But we do have Deutsche Bank actually cutting its price target on the shares of Tesla here down to $420. That's their new price target. That was, down to $345, down from $420. Now, they do maintain their buy rating on the shares here, but they obviously highlight weaker demand trends that they're seeing, not only here in the United States, but really kind of overseas, and also the slower Model Q launch cadence. They are expecting Q1 deliveries to come in between 340,000 and 350,000 units. That's just based on their own internal data. And also, they do believe that they will see some pressure on margin. So still keeping a buy rating. Pretty aggressive cut when you're looking at the price target here, but they're talking about the near term, about auto weakness just in general, maybe a derating when it comes to growth stocks, as well as the political uncertainty that's kind of been tagged to Tesla, unfortunately. So a lot of volatility here when it comes to the shares. Decent intraday move yesterday that faded. Let's see if they can get off the mat today and try to advance to the upside.
All right. Yeah, it takes a hit, but it's hard for me to think it's going to stay at the low end of its range for too long when it was just at new highs for its range. But that's Tesla for you. It'll go that way in a single week, which it has. But since we started trading on Monday, it's been pretty much like 267, to 290-ish or so. So we're down the low end of that. Definitely one to watch to know if we're going to catch a bid today, I think, because that's been your fast twitch, high beta risk on. If Tesla's going to get creamed today, then the odds this market ramps go down with that in my mind. How about Applied Materials upgrade there? At least some strength somewhere. NVIDIA's also higher today too, so that's starting off okay.
Yeah, you're getting some of the semiconductor companies getting a little bit of a bid this morning. Now we have AMAT. They were upgraded by Jefferies to a buy rating here, and that's up from a hold. Now they did raise their price target to $195, and that's up from $185. They just basically believe that the broader wafer fab equipment semiconductor outlook is actually looking a little bit better than what they imagined before here. And they expect stronger DRAM performance as well as NAND recovery. Now, obviously, both of those kind of have a little bit of a very low bar, which is why they also believe that maybe from a risk-reward standpoint, Applied Materials might be underpriced for the market. And they do believe that they're going to be the beneficiaries of leading-edge technology kind of hitting the market. Now, their March guidance does indicate that they're going to have low China exposure or low China revenues, that has been a problem for them. They have been in a little bit of the crosshairs. But once again, Jefferies kind of believes that that's going to be a very low bar. And if they can kind of remove or reduce their exposure to China as much as possible because of these trade wars and potential, I don't want to call them sanctions, but blockades when it comes to equipment that they're providing to China, very low bar. Once again, they do believe that that's going to be priced into the stock, and maybe we do see a little bit of an upside move.
Okay. All right. I think that to see something positive in that category, a few in there, is good. Tesla's turning positive, by the way. Semiconductors, SMH, positive. These little nuggets of stories this week have had, I think, some help keeping the market, going. These stock-specific stories. The CoreWeave IPO, KG, give me your thoughts on that. Is that a big deal to watch that?
I think it will be a big deal for those that are really trying to watch this space, but you can kind of say that maybe some of it's kind of fundamental with the company, why they cut their price when it comes to the IPO as well as the offering amount, but also that could be just a broader trading environment in general. You usually want to have an IPO when we're in this type of FOMO feeling within the market. That usually tends to lead to greater appetite for the IPO. So it looks like they're kind of lowering the bar here a little bit, trying to raise some capital. There's a report from Reuters that NVIDIA is going to be backstopping at least $250 million worth of shares when the IPO opens. So they'll have some pricing, stabilization there for the most part. And I would just say, look for some volatility when it comes to that IPO. And if you are trading it, I wouldn't use market orders personally because the spreads might not be that great. And usually IPOs, I'm not saying this is going to happen with CoreWeave, but usually IPOs, you see a decent little pop when they start off. And then over the next 2 or 3 months, usually they see some downside pressure. Once again, not saying that that's going to happen to CoreWeave, but if you're going to trade it, be very nimble with it and be understanding that the intraday vol is going to be pretty hectic, to say the least here, Oliver. So we'll keep our eye on it. But once again, I think it's more showing the IPO market might be softening a little bit more than what we probably expected at the start of the year.
Yeah. All right. I respect them for doing it right now. For kind of wading into choppy waters. So, but it also maybe speaks that they, maybe that cash influx is pretty important. So I can see you kind of nodding. All right. But we won't speculate too much. All right, KG, let's talk Apple and Meta. Minimal fines, big bad EU.
Yeah, we're seeing the European Union issue minimal fines for Apple and Meta here. Now, this is based under the Digital Markets Act, and this is something that's kind of been a little bit new here. So Apple's going to be fined, and they're going to potentially order Apple to amend the App Store rules just in general. And for Meta, once again, they're going to receive a fine, and they were going to be ordered to revise the pay or consent user data model in general here. So I think that probably is maybe a little bit of a win for not only Apple, but Meta. I think the big question mark, once again, though, we saw a news headline overnight that the EU could also be exploring maybe some adjustments to the digital tax to maybe retaliate it against the Trump tariffs that might be hitting the market. No one knows. All of these are news stories. So we're just waiting for the confirmations for right now. But I think this is actually probably a win for both Meta and Apple at this point. That the EU's leveraging a particular regulation that is fairly new, and we're not sure how aggressive they're going to get when it comes to utilizing those powers. And so we're kind of treading in uncharted territories right now when it comes to that particular regulation.
All right, so a little bit of rumor mill, a little bit of progression to some type of denouement in this kind of tit for tat. And so far, I don't think the stocks really care too much, to be honest. We got to keep track of these stories because it's interesting, but probably other things moving them for now. And thanks, KG.